What's up, guys? It's Himmeny. We got Andrew here from Tim Challenge Chat. He's in a few other programs as well. Um, so Andrew, if you don't mind, introduce yourself.
Hey, how are you guys doing? I'm Andrew. I'm with the Tim Challenge Chat. I've been in the challenge for over 5 years now. I found Tim stuff like 6 years ago. I've just been in the challenge ever since. So it started off like really small. It was just like I was in school and I was doing this a little bit. And then over time, I found out that I needed to do like more and more research because you could see like the basics um online, but none of that's gonna actually translate into making you successful.
Hmm.
So like slowly I had to like watch more webinars and like video lessons and all that stuff. And yeah, like again, like I started off really slow. I think it was like a couple years actually when I was just like studying, reading books, and it wasn't just Tim stuff. It was a lot of other resources. I think a big one for me was called Trend Following and by Michael Covell, and that's a great book because it goes into market bubbles, and so it like discussed like the 2000s bubble. It went over uh Bitcoin and crypto and how that would be a bubble. And this was like way back in like 2017,
Hmm.
where it didn't reach that point yet. But they were just like, when it hits like a certain amount of exuberance, that is when a lot of people are gonna get out of it and it's not gonna keep going up.
Yeah.
So those were my foundations. I did like before I um just used to like invest in like very basic things like ETFs,
Yeah.
like the QQQs and all that stuff. But it wasn't until like 2017 with crypto where that's what really got me started. Because before that, I didn't really look into this stuff. I didn't really pay attention to the markets all day.
Hmm.
So it wasn't until like crypto started, then that's when I was, like just doing this all the time, keeping track of things. And then, at the time I was at school.
Yeah.
So I was like doing that and then also doing finishing my engineering degree. So it was like a whole lot at the same time. I was
Hmm.
doing a lot.
Yeah.
So around 2018, that was when I managed to double my crypto account from 8,000 to 16,000.
Nice.
And that was by the time of May 2018.
Yeah.
But later in the year, I found out that the exchange, I was on Quadriga CX. And as you
Hmm.
know the story, the exchange went under and Gerald Cotton faked his own death, pretty
Yeah.
much. And all of the people that held their money in the exchange, they lost it.
Hmm.
And thankfully, I was able to get out before any of that happened because one of Tim's lessons is like never trust sketchy brokers.
Yeah.
So, and like if it's not like one of the big brokers, is probably sketchy.
Hmm. Yeah,
So
absolutely.
that was like a really big lesson for me, to be honest. And I've always been like super skeptical of brokers
Hmm.
since then because I was like a near death experience essentially.
Yeah, pretty much. And the thing is, you probably wouldn't have continued on too if you lost that account. You probably wouldn't have.
That's right.
Yeah, that's good to
'Cause
know.
that's what I used to start day trading, like anything that came out of that.
Yeah, that's very interesting. Thank you for sharing. So, what type of setups are working for you in this market?
So there are a bunch right now. So I think the main ones for me are just like big panics, either like intraday or multi-day.
Hmm.
We had a awesome one on GT II last Friday. And OTC panics are really the most they work the best for me, to be honest, but we haven't seen a lot of them in a while,
Mm-hmm.
and we haven't seen any smooth ones in a while. There was a bunch last year that were like super choppy, and those weren't the best. Mostly panics. I have a couple different ones. I have one that involves like halting, like down halts,
Mm-hmm.
and I have like a specific criteria where I would look at a bunch of things. There's like a bunch of stuff that I look at and then decide whether or not I'd want to dip by that. Um, Off the top of my head, I can't remember like anything too specific. There was a lucid, I
Mm-hmm.
think like 2 weeks ago. That was like a really nice one, but it didn't really bounce too much, so I ended up flat on that. But it's like setups like that also that I'm looking at.
Like the
Um,
typical big parabolic spike, multiple halts up type of thing, and then
yeah,
once the momentum shifts, and then
yeah, and then
you get that
it's a
bounce.
panic. Yeah,
Yeah. Yeah, that's interesting to me because there's also the halt shorting setup, which I've tried a few times. I'm not that much of a fan of. Michael Good talks about it a lot, but I typically don't like it because of it's just scary. There's so much going on with the halts, especially when short. Like if you're in a short on the down halt and it doesn't work, it gets pretty scary. So I might
yeah,
I
it's
might
tough
be
because you get
interested in
squeezed.
checking out those dip buys you're talking about because the downside is limited. You know.
Yeah, it's fairly limited. I think the major key with that is like timing. It's all timing because I can't tell how many times like I was attempting to do that and then I got caught in this big falling knife.
Yeah.
And then I would like, I would cut that at a loss. Then I eventually ended up being right. Like, I'm back to net zero
Yeah.
because I took that loss.
Hmm.
So it's all about timing, in order to like capitalize on most of that stuff.
Yeah. Absolutely. I definitely agree with that. Um, So typically is like the big panics on the larger caps, like Bed Bath and Beyond is what you like, and then you get those big halters, and then you try to
Yeah,
stick by
exactly.
those. Those are your top two, pretty much, you think? Or
Yeah, honestly, like for the listed panics, anything like below like $100 million market cap, that stuff does not work at all for me. Like I've ran through the data, that stuff doesn't work, and it's mostly things that are above 100 million market cap, and it kind of works like the higher the market cap is, like the more predictable it is. So like big panics on Bed Bath and Beyond or Lucid, those all were like pretty smooth because they had that big market cap. And I think another final setup that I'm doing is first red days because we've had like so many overextensions right now, whether it's like crypto, Bitcoin,
mm,
or even like AI. I'm short
yeah,
AI from yesterday. I'm still short,
yeah, that was a nice
and
short. I saw that yesterday.
is it going to pull today or is it going to squeeze? I don't know, but
Yeah,
I like the setup.
mm-hmm.
And we've seen a number of these similar type of plays, whether it was like CVNA a couple days ago
Yeah,
or BBBY like a few weeks ago. So that's sort of same setup. And I like another thing that I like about it is that it's over like $1 billion in market cap. So that means it's like it can't keep going up forever. Like it can't like keep squeezing and squeezing and squeezing because there isn't that sort of mania that there was in like early 2021 with AMC and
mm-hmm.
Genie.
Yeah, it makes sense. One thing I struggle with is like for me, it's anything over 100 million market cap I struggle with. So it's very interesting how you're like that's some of your main strategies are built on that. Um, and I don't know why, but to me it seems like these setups are less clean to the lower market cap ones. I get how you
Mhm.
mean the lower market caps are going to be really like whippy near your risk levels and stuff. I,
Yeah.
and maybe that's what you're talking about, right?
What do you usually focus on? Is it
I typically
dip buys?
focus on the like first red day like you, but on a smaller market caps, something that's getting way too extended. I'll try a few on the bigger market caps, but I don't usually have much success with them. Um, I don't know if it's my timing or if it's the I guess smaller volatility in it. That might be why I struggle with them. But I like the smaller market caps that are like pumped up, you know, first red day on something that's been going absolutely crazy, multi 100% in a few days. That's one of my favorites. And then I also like the pumps that are just walked up like 10, 20 days in a row. You get all those green candles. It's almost self-explanatory that it's going to collapse. But like you said with the timing, if you take too much too soon, you're not going to be there for the dump and you're going to be right.
Yeah,
You might lose like your max loss at the before the dump and then even nail the dump for 80% and not get out with a profit if you mismanage it.
yeah,
Um those are my top favorite ones. And then overextended gap down as well. It goes into first red day too. Um I like those three because well, the overextended gap down in first red day, you have a set risk level. That's what I really like about it. Like because I'm not great at knowing when I'm wrong, but I'm good at getting out when a level breaks. So I typically wait for the risk level to break and then I exit those. As far as the pump short, the walk up, I typically will put a dollar amount in my head so that I still have a set risk basically. You don't really know that you're wrong, but if you sized in wrong and it hits your max risk, then yeah, you're wrong. That's how I take it. So
yeah,
I like having something that's very clear to me when to exit type of thing. So I like to write in my notes as well. I know you do that, but I write very
yeah.
detailed about the trade as it's playing out and stuff so I could go review it. And before I get in, I set my risk level so I'm not emotionally second guessing and everything once it gets there.
Yeah, taking notes is like incredible. Like I think like you got to do it.
Mm-hmm.
And even like after the trade, I take notes like looking at like how I did, like
Mm-hmm.
what I did right and what I did wrong.
Yeah.
And there's always something usually, it's very rare for me to, take something that's perfect.
Yeah.
But there's usually something that I did right and there's usually something that I did wrong. It's very important to just think about that because especially in hot markets, it's very easy to just like, do the same things over and over again. And then because the market's so high, you start getting loose and sloppy.
Mm-hmm.
And so you're taking trades that it's not even your setup and
Yeah.
you're looking at things and you wouldn't have considered that before, but because things have been working out, you feel like that's because of you as a person, not because of the market.
Mm-hmm. Yeah. Um, that's absolutely right. And I feel like when you write your notes, even when you do something, when you do good trades, you end up finding what you did wrong there. And that's what's great about improving it. You can mess up as many times as you want, basically, but those mess ups will give you details on how to fix it next time. And I mean, after a certain point, it's on you to change your trading. I hate seeing people like I'm triple leverage short on this. I know it's
Yeah.
dangerous, it's scary, but what do I do? I'm like, get out. Why are you in? Why are you doing that?
Yeah. I
It
mean,
doesn't make sense
people,
to me.
there's always that adage of like, you got to live to see another trade.
Yeah.
And that's, incredibly important. You can't
Mhm.
risk, all you have or like more than you have ever.
Yeah, exactly. And then you're completely out of the game and you don't have a chance to continue working. And just like your crypto account, if you didn't get that money out, you would have been out of the game before you started pretty much.
Exactly. But that was all because of the knowledge and the education.
Mm-hmm.
If I didn't know what Tim was talking about, if I didn't hear that, I might have not got my money out. But because, especially in his early content, he was always hampering about sketchy brokers, don't trust
Yeah.
the brokers, and all that. That's what made me decide to withdraw because I was like, I'm not
Yeah.
just gonna leave this stuff in here. I don't trust like that.
Yeah. And like that's the thing. I was also when I got into Tim's program, like went in with the mindset that I'm gonna start with a clean slate. I'm gonna do this from the beginning, and I'm gonna try to like do exactly as he does, you know, and that really helped me because I stayed safe. I was cutting my losses, even though I wasn't sure what loss cutting meant. I was still cutting my losses, so
Yeah.
that was definitely beneficial for me. Um, Another question, how do you typically prepare for the market open or get your stuff ready for the next day, stuff like that?
What I usually do is just like look over recent runners,
Hmm.
see what they're doing, check out on the hot sector. Right now it's AI. So I'm just like looking through all the different AI stocks, see what they're doing.
Hmm.
Um, a lot of the times these plays just come out of nowhere if you're not like constantly like looking through different like recent runners and whatever. They just pop out of nowhere and it's too late. Right. So you got to keep track of that. Another thing I do is like I pay attention to like what people are talking about in the chat.
Hmm.
Challenge chat, super important because like there has been like a number of tickers that have come up, like especially like ETCC yesterday,
Yeah.
that, that didn't come up on my scanner, but like, somebody mentioned it, Tim mentioned it.
Hmm.
I look at the chart and it's like a multi-month breakout with like great news. It's closing strong, all that stuff. But like that didn't come up on my scanner. So like the challenge is like super important to watch out
Hmm.
for. I have a couple screeners or filters or whatever they're called
Yeah.
on my thinkorswim, so I check that too. Um, I have a couple that check for like really big panics.
Hmm.
So I have like a couple that checks for like panics over like 20% in pre-market and during the market open. And then I have like my top percent gain scanner. And so I use like all that to just like see what's happening in the market.
And so once you get those tickers, what do you typically do as your first step? Do you write them down? Do you formulate some type of thesis in your head first, or how do you go about that?
Depends on what it is, but yeah, I usually just put them up on the charts
Hmm.
and just like watch them all day. Most of them won't fit my setup, but like if there's anything like multi-day breakout that could happen, I'll put an alert like right below the breakout level so that I get notified when it's like approaching that level. That's what happened to HSCS a couple days ago,
Hmm.
where it had that multi-day breakout and that popped up on my I got an alert from that. It wasn't even on my charts. So
Hmm.
alerts are very important. But if it's like one of these panic plays, then pull up on the chart, see what I can do with it. Usually it doesn't meet my criteria.
Yeah.
So that's the thing. Like most of these things I'm watching, like 95% of the time, it doesn't even meet my criteria. I'll watch it, but nothing will happen. It's very rare for something to actually meet a criteria where I want to trade it.
Yeah, that makes sense. Being picky with where you're putting your money, basically. And I could agree with that as well. Like most of the stocks I watch, they're not my setups, and they're not gonna set
Yeah,
up, you know. But I'll watch them in case they set up. That's the most we can do. Um, what's funny is when I set my alerts, I'm usually shorting, so I'm gonna set the alert at a crazy extension. I'm gonna set it at a high level of volume in the past, a resistance level with heavy volume, and typically they never hit. Like I have alerts still
yeah,
from 2020, 2021. I have alerts from like the beginning of 2021 that still didn't hit. um and then if you ever pull up the charts, it's actually hilarious. Like when I set the alert was the high and it never went back there. um that type of stuff gives me more confidence in shorting once you get the actual crack. But that could be dangerous because then if you put that confidence somewhere else, you're gonna get squeezed. But yeah, like I'll get 10 stocks on my watch that I'm expecting to short a few days from now. Um, and a lot of them will just fail before they even spike enough, and then I take them off watch. But there's nothing wrong with that. Um, you know. And
yeah,
how I
exactly.
do it is I'll get a bunch of stocks in the morning, and then I'll detail each one, see what's important and then narrow the focus. And then on those, I'll put a specific plan, like short at this level, risking this level, like long here off this dip, risking that level, that type of stuff. And then even if I miss them, I could see the timestamps that I wrote the notes, and then I could review them later. So I really like doing that.
Yeah, the plan is super critical because
Hmm.
that is what tells you like, where your stop is, like how much you're gonna risk.
Yeah.
That's everything because especially a lot of newbies, what they do is that they get into a stock, they don't even have a plan, they just kind of feel it out, or they have like a set dollar position amount that they use to get into a stock. Like every single trade, I'm gonna use $1,000 position size. That's like very different depending on what the stock is. So the dollar risk is like the most important thing because that is your plan if it doesn't work out.
Hmm.
So you want to lose like that certain amount. Otherwise, who knows what your risk is? Who knows if you're comfortable with that? So it's very important to calculate what am I going to lose when if this doesn't work out? That's super critical. And just like making sure to cut losses or setting a stop, also super critical too, because like, especially when I started, probably when many traders start, like you let losers run. Like you're like, oh, maybe I'll come back.
Oh yeah.
I'll lower my stop a bit. I don't want to be wrong.
Yeah.
That's embarrassing. So, you let your losers run and then eventually you realize like it's not good because that's how you get massive losses. Gotta cut losses quickly all the time.
Yeah, absolutely. And going off that dollar risk, how you mentioned is, I feel like it's even more important than a chart risk level, because even like, okay, you got a risk level on the chart and you have that max dollar risk. When you line it up, it matches, and like you get that type of risk reward you're looking for. Um, but if there's no level to risk off of, you still have a maximum loss in your head that you're never gonna let it get past that.
Yeah.
And what I do well is, even when it slips that maximum loss, I'm still getting out. Um, it's tough, you don't really want to lose more than you plan to, but that's how that's how I survived this long, basically. And yeah, I'm going slow with my trading, but um, it's better than not being able to trade and not being able to like witness this price action.
Yeah, that's true. You gotta stay in the game. It's number one.
Yeah.
Because like think about it, like we had like such a tough market last year and it wasn't easy for me. Some people made a lot of money, but it wasn't easy for me.
Mhm.
And if I went full tilt or just like went nuts and like, decided that I have to make something work, I have to, use full levy, something like that, then I wouldn't have lasted till this hot market right now in 2023.
Mhm.
So, preserving your capital is like rule number one. Like, don't lose money.
Yeah. I wasn't here for 2020. That's when I left for about a year. Um, but even before that, like, because I had my first green year in 2018. So once it was like the first 6 months, and once that happened, and then your setup changes, you can't figure out what to do. You can easily get into that mental state where you have to force something, you have to make it work, and I don't know. Maybe leaving during 2020 is kind of a blessing to me. I could have blown up during that time, but it made me realize what I missed. So I felt that was really important. um, so I don't want to go into your market open here, but if you have any finishing lessons or something you feel that's important for traders to hear, can share with us, that would be welcomed as well.
Yeah, so like the main thing is like really just keep a trading journal, to be honest, because like
Mhm.
every single trade you make is important, and at the start, I might feel like, oh, I'm just like trying to feel it out, whatever, whatever. But it's actually like super important that you like think about your own process because that process is gonna advance and develop over time, but only if you let it, and the only way of letting it is if you like really think about like what you're doing and like, okay, I did this, I risked this level and this was morning panic setup and I used this amount of size and I got stopped out. You
Hmm.
know, that's a basic example, but it goes deeper in that because like sometimes, you know, even the time of day is important. So like the more details you can add to your trading journal for every single trade, the better. You know, that's just gonna develop and expand over time. And that's what put me on the path to success in 2020 actually, because before that I didn't have trading journal.
Hmm.
And that was a difficult time. Well, you know, everything started to click once I started to journal. You know, so that's a very big key component. And especially in the challenge, like, you know, no one's like, make sure you journal your trades. No one's saying that. So
Hmm.
I'm going to say it. Make sure you journal your trades because that's super important. But you're going to see your progress improve 100%. And you're
Yeah.
going to see what works and doesn't work.
Yeah, I definitely agree with that. Yeah. Yeah, I can't even think about when I was trading without a journal, like I don't even know what I was doing. And you can't figure out what
Yeah,
you're doing. There's no way to figure it out. If you put in
can't figure it
200
out.
trades, you have no idea what you did once you look back at your statement or something, you know. It's crucial. And then I'll even say take it a step further and then timestamp your notes as well as any key moments in the trade, what you felt. If you notice like your emotions shot up, like you have a crazy amount of excitement all of a sudden,
Yeah,
you got to write that down. If you have some sort of bias, like okay, I got beat up on GTII 5 times, that's why I had to cover early on my last short, the one that you were panic dip buying. I had to cover it early because I got so beat up like 5 times in a row. But I only knew that because I wrote down every detail that I could. And while the trade was developing, the ones that sort of didn't work out in GTII, you see my thought process changing throughout it. Is like I want to hold for a big collapse, and then I'm like, it's not panicking, and then it's like max slippage. So what that tells me is when it doesn't panic, just get out and you'll avoid the slippage. It's easier said than done because you have to feel
you
that a
know,
few times. You have to detail it in the notes, and then you go through it. But I feel like if I didn't write anything in my notes, I would have had to do it 50 times to then finally stop doing it, you know, but it's only been 4 or 5 times, and then that's still a bit much, but I was able to cut that out completely and sort of fix my trading over the last month.
yeah, I
So
mean,
yeah.
there's just so much to learn from every single individual trade. There's so many variables, so many components. And, you know, as you go along, you realize there's more and more different variables on like, you know, like what's the market doing? Is this like a sympathy play? You know, is how high up is it before I enter the trade? You know, all these are like certain like little variables, but they might make the entire difference for you in your strategy and what you're trading.
Yeah, and that's another thing. If it's up too much, just like when something panics too much, the last time I did this was SOVR. It has a history of a big green day and then a followed up red day, but it gapped down to the level that I would cover at, you know, and I kind of ignored it and I shorted there. But then what I took away from that is I put when it's down 10% or more, don't short it, you know, unless it's a pump
Right.
that's gonna collapse or something. You can take some smaller size and short it, but
Yeah,
that's a
didn't
great
you
example.
trade VENG like last week?
Hmm.
VENG?
Yeah, I was short on that one too.
That worked out really well, right?
Yeah, yeah. And that's like when I'm finally getting back on track. So I was having trouble putting some more shares on, but I just knew I
Yeah.
had to participate in it. You know, I had it short in 2 accounts, but really
That
small size. Um, and
one was a
just kind
beauty.
of like to prove that I could still do it type of thing.
Yeah.
And and that's what that is what boosted my confidence coming into January. Because that one was already off the highs by like 20% or something while I was holding short through December into January. So that felt good, you know. And I didn't want to ruin that average, so I shorted into in interactive brokers as well, and rode
Wow.
them both down to like $1.
Yeah, I know that thing fell apart so quick.
Yeah, that was
That was
fast.
insane.
Yeah, but I appreciate your time. I appreciate you sharing what's working for you in the market and all the lessons as well. Um, and I'm gonna be able to rewatch this a few times and take as much as I can from you. So I really appreciate it.
Yeah, no, awesome chatting with you, man. It was great.
Yeah, absolutely. And we'll do some Zooms again and review some trades as
Oh
well.
yeah, for sure. Yeah.
Yeah. All right,
100%.
man. Have a good market open here and good luck.
Good luck, man.
All right. Thank you. See you, bro.